Meanwhile, the Federal Reserve held rates steady yesterday, but inflation is not where the Fed wants it. The Iran war is making everything harder to read. Take a look at oil, right? WTI's now lower. Brent, though, surged earlier, but now falling in the aftermarkets all over the place. Pretty much since the war with Iran broke out, though, everything is higher. Fed Chair Powell made it pretty clear, though, that the Fed doesn't have all the answers right now. Take a listen.
So the thing I really want to emphasize is that nobody knows. A number of people mentioned if we were ever going to skip an SEP, this would be a good one because we just don't know. I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see. We don't know how big these effects are going to be. I don't want to speculate about what that might mean because honestly, that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does.
So the Fed doesn't know, Wall Street doesn't know, but our next guest, does he? He's recently leaned into energy, physical infrastructure amid the war. Joining me now, I'm pleased to say, Oleary Ventures Chairman Kevin Oleary. Also, we know him as Mr. Wonderful, and you're wonderful to sit here with me on set.
Thank you.
That soundbite sounded like a whole lot of I don't know. How do you invest in a world full of I don't know?
You think about what the world looks like after the conflict is over, and you make bets. He's right, we don't know. But I'm pretty sure when this is over, what we're going to be looking at is some multinational policing of the Strait of Hormuz, very much like Panama Canal or Suez Canal, same thing. It's going to be expensive, but I think it's going to be paid for by the countries that have to have these commodities. You detailed oil, obviously there's others. The other thing that I'm kind of making a bet on, we talk about fertilizer, for example. So policy domestically after this is over is going to be security of supply and supply chain. And you know where I'm thinking right now? Canada.
Interesting.
They've got all these commodities. There's a tiff war going on right now. But I think what's going to happen is, out of necessity, number one importer right now of oil into the United States, Canada. Number two is Mexico. We're going to be firming that up for the security and abundance of energy. But potash, fertilizer, aluminum, that trade deal with Canada, and the only way I can do it in going long Canada is I just bought the Canadian dollar.
Okay.
So, and I've done well with it. And so we'll see a lot of speculation, but when this is over, I think, and as an investor, the world is going to be a much more stable place. I know a lot of people don't believe that.
Is the Middle East going to be stable? Because you've talked about brain talent and other resources that you have in, like Dubai, for example. What's the comfortability still being deployed in the Middle East?
Narrative's changed in the last 3 days. For the first time ever, the neighbors of Iran have said, okay, this isn't going to work for us. We can't include you in the circle of friendship in any way.
Talking about Iran?
Well, it just doesn't make sense because Iran is raining missiles on their own neighbors.
Yeah.
And so that probably, whether it was intentional or not, it looks intentional, is going to put them, they'll be pushed out. And so these neighbors are going to help fund, in my view, the stability and policing of the Strait of Hormuz.
You often have your hands in a lot of different businesses, and you're thinking, what are the hot businesses 2 years from now? I think I sat with you a year or two ago, and it was still all about AI. What's the hot investment, right? Is it still AI? When you think about startups and American people coming to you and trying to live out the American dream and building a business, what's hot?
What's hot is power. I mean, my theme of my infrastructure investing, where I raised most of my capital in equity and debt, is around securing power. We now know that the North American grid is tapped out. I don't care what you want to build. Could be a data center, could be a cloud-based center, could be a new manufacturing facility. There's no more power on the grid. So if you want to do a new project anywhere, you need a government that is compliant and going to help you in terms of path to permit, because you want to raise debt, you need path to permit minimum 36 months, but better if it's 24 months, even better if it's 12 months. You need nat gas, you need fiber, and you need water. Where can you find that? My big bets are in Utah and in Alberta, Canada, because that's the lowest cost of power. And I think watch what's going to happen in Utah. That government gets it in terms of path to permit, and I'm one of those partners there. And I've searched every state, so I'm pretty happy with that relationship. That's number one. And the other thing I've learned of late is alternative asset classes.
I want to talk about alternative asset classes, Kevin, since you go there. You are king of wearing alternative assets on your neck and your wrist. You have an incredible piece right now. And all joking aside, you talk about this as an investment in asset class. Show us and tell us what this is.
If you go back, just look at the numbers and say, what asset class would I've never bought in 1958 to 1962 would have been modern or contemporary art. It was in chaos, in chaos. The markets were, relatively unknown. But today, if you bought a Picasso back then at $2,800, you'd be selling it today for $140 million.
Okay.
I think the same thing has happened now in an asset class. It's been around for decades. Collectible sports cards.
Show it up so we can see it.
There you have
This
it.
is
This is probably the most valuable collectible basketball card in history. It's covered in diamonds and white gold by Tiffany. I wore this at the Oscars. Jordan, LeBron, Kobe, all three. These are logo men. 22-year-old card, last traded privately for $26 million. Add the Tiffany, call it $30 million. What it'll be worth in 10 years? 100 million? I have no idea. But I know that I'm not selling it. And so, because it's the only one in the world.
And you're not wearing it around New York City.
No, I'm not. Obviously, it'll go back in the vault tomorrow. But I wanted to bring it up because so many people love Kobe.
Yeah.
And, we brought it to Los Angeles for the Oscars. But it's not the only card in the collection that I've invested in. I'm an investor in the company that owns the cards. So I want exposure to the asset class. And I'm looking at liquidity. These are very liquid.
Interesting.
Huge market. I'm looking at gross transactional value per month going up and up and up. And I'm looking at international buyers, particularly in Asia. So what I'm seeing happen here is that at the end of the day, this looks very much to me like an alternative asset class in Warhol or any of the Picassos. And so I want to own it personally in an index of many different cards. And that's what I've attempted to do. And the other thing about this, it's so much fun.
It is fun. You look like you're having fun on the red carpet. You're having a little fun here.
Yeah.
Kevin, this is great.
Thank you very much.
And lock that thing up before I find you and get it.
Yeah, and I paired it with this beautiful Rolex watch.
Yeah,
Look,
lock that up
Ruby
before I
on
come.
ruby. Ruby on ruby. That's absolutely great.
It's a little out of my price range, but we'll leave it at that.